Hi, my name's Craig Earl. I'm a Senior Market Analyst at AUDUSD, and today we're going to talk about the Australian dollar versus the US dollar. Now, this is a pair that's been in consolidation mode in recent months, but the pressure that's building is very much coming from above. At one point it did look as though we were going to see that breakout higher a couple of months ago, and things were starting to build up nicely to the upside. But things have very much changed since then, and as you can see on the chart, we do have that level of support coming in around the 70 through 70.50 level, and that has held so far. That's held despite numerous tests. The concerning point of this, and this is where these are the points that matter from a chartist perspective, is that each rally is being met by selling pressure earlier and earlier each time. And what that means from, again, a charting perspective is that it would appear at least that there's more pressure building from the upside than from the downside. And therefore this is widely viewed as a bearish signal. Now, that's not to say that we'll necessarily see a breakout to the downside. These things are never predictable. But all we can see right now is who momentum is with. And that gives us an indication on where the breakout could come. If we do see a breakout to the downside, then we can see that flash spike move that we saw last month, which took us down towards the kind of 67 levels. That may give us an indication as to where we're heading, but I always take these kind of flash moves and the levels that they achieve with a bit of a pinch of salt. To the upside, if we do see a break back above one of those previous lows, then I think the kind of 73 area becomes very interesting. That's where we see the combination of kind of moving averages. It's where we see a test of a previous high, and it's something like this that would suggest to me that we have seen a change in trend. So that's the technical picture that we're seeing here. From a more fundamental picture, I think there is still going to be a couple of factors playing a role here. The dollar has remained supported. I think it's safe to say at the start of this year. Whether that can last, I think, is very much another thing. The picture in the US, whether it be the economic picture or the central bank picture, things are becoming a lot more dovish. But what's helping to support the US dollar at the moment, despite all of this, is the fact that these things are happening in other countries too, and the Australian economy is one clear example of this. We've seen the economy has threats of its own. We've seen the housing market there is deflating, which is causing concerns. There's a clear correlation between the house prices and consumer spending because of the wealth effect that comes with prices rising rather than falling. The fact that in areas like Sydney and Melbourne, etc., are falling does tend to have negative implications. There's also the central bank, which is becoming more dovish. At one stage, it looked as though we were looking at 2020 for a rate hike there. Now we're not even sure that the next move in interest rates is going to be higher. So we're facing two situations here where they're almost competing for which one can be weakest because of the way the economy is moving, because of the way central banks are moving as well. So I think it's times like this when I think the charts are even more important. And right now, for me at least, the charts are telling me that this bearish momentum is very much building, and while the supporters remain strong for now, I think it's going to be a very testing couple of weeks for the Australian dollar US dollar pair. And if that 70 level breaks, then not only have we lost long-term support, but that's a key psychological break as well.